Hello and welcome to Raising the Barr, the go-to podcast for business owners and entrepreneurs looking to elevate their marketing game. Today, we're diving into the world of finance, investment, and wealth management. Our guest today's been in the industry for over 20 years, and we're going to dig deep. Ladies and gentlemen, he's the CEO of Capital Haus, Brendan Gow.
Thank you very much.
Brendan, thank you so much for joining us today. It's great to have you on.
Thank you.
Before we go into the here and now, let's go back to the beginning.
Yep.
You've been in the finance world for over 20 years, is it now?
Yeah. So I guess out of the pot and into the fire, I started my career in finance on the eve of the GFC. So back 2006 going into 2007. Probably the best time to start if you want a baptism by fire, I guess. But it's been a pretty long journey since then. It definitely hasn't flown by, and it's been fairly storied for me. But that's 20 years ago.
20 years ago.
Yeah.
So that journey led up to the point where you decided to found Capital Haus. What was the main gap you saw in the market and your reasons for launching the company?
Well, really, the main piece of Capital Haus is customer service. It's always been customer service, hence, financial concierge. That forms everything that we do. Client relationships is pivotal. It's key. I mean, of course, the foundation of the business is good quality, affordable investment management. Both from private client and corporate client, but really the company was founded on a very strong need for customer service. I've worked in a lot of private wealth businesses, global and domestic in Australia, and I've said this a few times, but to move forward with what Capital Haus was going to become, we really needed to go backwards and look at what traditional customer service or client service was. And so today, I've got clients I speak to on a daily basis. Probably the least, I would say, is we speak to clients on a monthly basis.
And how does that differ towards these big multinationals?
Yeah.
We won't name names, but everyone knows who we're talking about, yeah.
Well, I think that in Australia, here in Dubai and other parts of the world, financial services is about an annual review. So you'll have a financial advisor. They'll sit down with you again once every 12 or 6 months. That I think that's just poor form. We're working with clients' finances. It's people's money, their life savings. It's very hard to make. So we need to make sure that, one, it's being monitored as life stages change, as people age, they have children, they get married, they buy houses. To meet with a client once or twice a year, it's just not appropriate. And hence, when we talk about what is a financial concierge, traditionally, the accountant is the trusted financial professional in any client's, quiver of professionals they use. Whereas for us, we have clients coming to us to check their accountant's work. So it's definitely out of the norm, but the relationships we have with clients, that's what founded effectively what we are today.
Yeah, and I love that term, financial concierge, because like you said, I think when someone's advising you on it, if it's wealth management or investments, it's such a personal relationship.
Yeah.
And I always think, like the other day I had my phone ring, it's someone from a big company. Oh, would you be interested in a conversation with this? How can you trust someone who you've not built that personal relationship with?
Yeah, absolutely. Look, I think when you get into financial advisory, you're taught from, whether it's financial advisory or whether it's any kind of sales, rapport building is the first piece. And you hear a lot of people giving sales advice or marketing advice, and they always talk about, don't focus on what you want to sell. Focus on what the client needs. Find out what their objectives are. And as a financial advisor, especially in Australia, you can't do your job unless you know what the client wants to achieve. It's like you go to a doctor's office. They need to find out what the problem is. They need to ask you questions. You can't just sit down and the doctor says, you need to have an arm amputated. That's just absurd. So it's about, first and foremost, rapport building, building really good quality relationships with clients, and then getting to understand them. And our clients, we understand them intimately. We need to understand what it is that they want to achieve in the next 12 months, 5 years, 10 years, 20 years. Yeah.
And where your service is very personalised, are other companies literally doing a box ticking exercise on returning X amount per annum and targets in that kind of way?
Yeah, absolutely. Just this morning, we had our company-wide weekly meeting, and our junior associate, probably the youngest and the most junior in terms of expertise and skill. He gave every weekly meeting, he gives a talk on a market update. And I was listening to him give this market update to the whole company. I just was kind of astounded at the understanding that he has of global markets. He's been doing it for about 2 years now. That's the most underqualified person in our company. And so when it comes to, really the offering that we're giving to clients, client services and investment management, first and foremost, having the wealth of knowledge, the understanding, the skill, the expertise, that's absolutely vital. So that's probably step 2 after client relationship. But absolutely, a lot of financial advisors here in Dubai, back home in Australia, they are following a tick box exercise. What's your date of birth? What's your name? What do you do for a job? What do you earn?
We've all seen the forms, haven't we, that they tick up on doing it.
And they're all exactly the same. Our clients get, they get a gift from us on their birthday, which really, it's just something that I've always done, and the company continues to do that. But we call them and we talk to them about their children's birthdays and say, "Oh, happy birthday to such and such." Again, we won't mention any names, but that's sort of what I mean. That for us to be able to do that and provide that financial concierge service, you really need to know the client. You don't get that from asking questions about assets and liabilities. Most of my meetings that I'll have with clients, the first meeting, most financial advisors know what that term is. It's your first appointment. That's where you get to know the client, your fact-finding meeting. I probably spend maybe 5% of that meeting on a fact-find document. The rest is just talking to the client. Tell me about yourself. What do you do? What do you want to do? So trying to understand where they are now and where they want to be is vital, and all of the different steps in between that we need to achieve. I've had clients now for so long that I've talked to them about their kids starting in private education, going to high school and the massive expense that's about to come. And then being at the end when the kids have all just finished school, that expense is gone now, so the budget's clear.
And then they've got to pay for a wedding.
And now they've got to pay for a wedding, and then exactly right.
It's all because, and with obviously your journey there, because I think as company owners, it's quite easy for us to care that amount, that we're willing to put so much in, build relationships with people. As you've grown the team over the past years, you spoke about the most junior guy there. How have you set about finding people who also want to build those relationships?
Organically. Yeah. It has been 100% organic. We've never had a staff member leave. We've never fired anybody. We've never had anybody quit. It's fairly interesting that when I use that term organically, that so many people understand what I mean. There's a few things really about me. I think that a lot of people know already, that I definitely see myself as the luckiest man alive. 2 beautiful kids, beautiful wife, a very successful private wealth company, but I also get to go to work every day with my best mates. what I mean when I say that is the people that work in the company now are people that I've come across in my life that have shared interests. They understand what a collaborative environment is about. They've wanted to come along the journey, and we wanted them to come along as well. So we've never advertised for talent. We've never sought it. It's just kind of appeared. My EA, for example, chief of staff now. So she's just been given a promotion, she'd call it. We met for a conversation about something completely different to hiring somebody. And she's been one of the best acquisitions that the company's ever had. So organically is I guess the best way to put that.
And when a lot of people see the wealth management industry, financial investments, and these are quite big, scary terms.
Yeah.
People think you've got to have a degree in economics or you've got to be fantastic with numbers and that. Just how important are those core skills, and how important is the actual people within the business caring about the best interests of the clients?
Well, look, when it comes to, when it comes to being an economist, and let's use that as a fairly broad term, what's most important is having an opinion. Now, the only way you have an opinion is, by reading and understanding what's happening in markets. For our clients, direct to market investments, direct equities, private markets investments, you need to have a very deep understanding of how those work. If you then look at the economics of things from both a micro and a macro scale, you basically just have to read a newspaper every morning to really understand what's going to happen. But what clients want you to do is they want you to form an opinion. I believe XYZ is going to lead to ABC. If you have no idea, if you can't form an opinion, they're happier for you to have an opinion and be wrong every now and again than to not have any opinion at all, because they need education, they need direction. That's what they're looking for in a financial advisor. So I wouldn't really say that you have to have a double degree in economics and finance or law or anything like that. I have a master's in financial advice. That's vital for giving advice in Australia. So quite overqualified for giving advice in Dubai, but it's definitely not. I left school and I went straight to work. Yeah. I started out working and studied whilst I worked. That put me ahead of the game. Later on in life, I worked for one of the big four banks in executive advice in Australia, and I was surrounded by people that had spent the last 4 to 8 years in university. You put them in front of a client and they can't talk to people.
Smell.
Exactly. So look, being learned and having the education to meet education requirements, I think you definitely get a lot more on the job. What's more important is having an understanding of what's happening in global markets, and also how to maintain a good relationship with somebody.
100%. And you mentioned there the difference between the Australian market and the Dubai market.
Yeah.
Just how chalk and cheese are they?
Well, look, I think now Dubai is moving towards more the regulatory system that Australia has. Under ASIC, having an Australian financial services license is definitely one of the highest or one of the heaviest regulated financial services in the world. Dubai is moving that way, definitely, and you can see a lot of the, let's say if we go back 10 years to what financial advice was in Dubai, there's still a bit of grandfathering of that. I think you will struggle to find a financial advisor in Dubai that also has a strong knowledge of direct investments. Yeah. For a lot of them, they are, again, just ticking a box. Well, Mr. and Mrs. Smith, we put you in these, 5 or 6 managed funds and let it sit there for the next 10 years. that's not financial advice. It's not investment management. I've seen clients who, in peak performing markets in Dubai, are still down 5%, and it's because of fees. So that's historically been the story with financial advice and investment advisory in Dubai. It's changing very rapidly, and so you're seeing a lot of those businesses that most people 10 years ago would have received a cold call from, are moving into places like DIFC and AGMC because they're wanting to become more, regulated, more qualified. We saw it in Australia where they increased the education requirements. Every financial advisor had to do a national exam, sort of like passing the bar for law in the US, for example. Continual professional development requirements, all those sorts of things. Now, that for an older advisor who's 55, 60, they really don't want to go through that process it's going to take them 5 years. By the time they retire, they'll finish. What's happened with that is the consumer has a lot more faith in their advisors that they're getting the right advice. I think ultimately it's true. It's fantastic that we went through that kind of reform. Dubai, as I said, it's going through that now, and it's going through it very rapidly.
Yeah. I think there were a lot of industries here that were a little bit like the wild, wild west, weren't they?
Absolutely.
They're all starting to come a little bit more on track.
Yeah. Well, I mean, everybody in Dubai is here to sell something, right?
Oh, everyone.
Nobody's coming here to retire.
Yeah.
So, it's there has historically, exactly. There's been a bit of the wild, wild west for quite some time. But, I moved here first 10 years ago. I left about 3 years later, went home, I met a girl, went home, got married, had kids, COVID happened, then came back around about 12 months ago. What Dubai was then and what it is now are two vastly different things.
Yeah, it's changing so quickly. And you said there about some of those kind of companies, they were traditionally cold calling, or they are still cold calling. Obviously, your approach to recruitment has been very organic, finding the right people over time.
Yeah.
How is that a similar approach you use to client acquisition, or how does that work?
Well, so for us, I kind of say this, and I've been told to stop saying this, but we're not really after new clients. So we just have clients coming through the door to us, and if they're not coming through the door, we're acquiring. So we're acquiring very aggressively. Our growth trajectory is fairly massive at the moment, and within the past 12 months, we've seen 3 acquisitions. We actually had another acquisition today, which was a 4th one, small one, but and then the next acquisition before the end of, I want to say before the end of April. Someone else is going to tell me by the end of June. So the growth trajectory for us is massive. That's how we are seeing most of our clients, and it is again the changing environment in Australia of aging financial advisors that don't want to go through those education requirements and sort of think, well, if I just sell my business, I can retire now and make sure my clients continue to be looked after. So for us, that environment in Australia is very, very strong. It's very prevalent. There's so many businesses available for sale. Dubai is very different, but we do actually have clients not through acquisition that that just kind of knock on the door and say, Mr. and Mrs. Smith said we should talk to you.
Exactly. And with the events and things like you're doing that, the paddle groups, these kind of things, they're a great way of building that community of like-minded people within Dubai.
Absolutely.
Yeah.
So surprisingly, some of the paddle events that we've done in Dubai, how strong they've been for our brand and our presence back in Australia. It's been fantastic. People are seeing on our social media, on our websites, what everything that we're doing. Very little of it is finance. They're seeing a lot of sport, a lot of travel. There is some finance in there, of course. There's some market updates and tips and education. But primarily people are seeing things, the stuff that we find fun.
And every brand in the world's going that way. Like the big trends at the minute are community building, storytelling, people always say, don't they, if you look at Red Bull, you'll never see them put a can of Red Bull on their social media.
Yeah.
Like it's these big, fun, exciting things.
Yeah, exactly. I actually heard somebody tell that story just the other day, because it's very true. You look at Red Bull. There's nothing of Red Bull on there except sports, which that's what people want to see. They know if they know the product that you're selling, and they know who you are, they can get a grasp of who you are. I've always said, because I took it off my own back many years ago to start recording videos on a terrible quality iPhone in a little office, and not even using a microphone, just about market updates. That's literally all it was. Now, I never got any clients from that. We don't ever get clients from recording videos about market updates, but people want to see that they want to see that social proof that you know what you're talking about, and you can hold a conversation. So, content on social media, website branding, it definitely doesn't have to be what it is that you're selling. It needs to be who you are, and it needs to be organic.
Yeah. And it's such a great way for people to connect with you, because like you said, there's a lot of these aging financial planners, which nowadays we see people making higher and higher net worth younger in life.
Yeah.
They simply don't see them aligned with those kind of people.
Yeah.
So to come across guys like yourself, it's that natural synergy where you're best placed to do them. You mentioned earlier today that you do both private clients and corporate clients. How do your services differ for both of those?
So, look, I think that the reason we're here in Dubai today is because of the relationships that my business partner George and I formed over the last 10 years out of Dubai. We were both headhunted out of the financial world in Australia to come to Dubai and work in global markets. And, the people that we met 10 years ago are the people that we still have relationships now, that they've moved on to doing bigger and better things. They've started their own funds. They've started working in private markets, in either private equity or private credit. So for us, corporate advisory is a passion. Right? So we're working with people that we love spending time with in that space. And then, of course, we're introduced to other companies outside of that. We then also, because we have a presence here in Dubai and people are seeing what we're doing, in our branding, we also have really good relationships with people back in Australia as well. We were born there, so clearly we're going to have relationships there too. But, it's the difference between those and the private client relationships. I actually couldn't say that there is a difference, because again, it's about client service. I'm not doing anything different for Mr. and Mrs. Smith, from a relationship perspective than what I'm doing for, Mr. Fredrickson, who owns a multi-million-dollar company. They both have a need that they need filled. They have an objective to achieve. For us, corporate clients typically need money for project funding, project financing. Now, is it going to be debt or is it going to be equity that's best for you? Now, on the other side of the coin, we have private clients who have money and they want to make it more. It's as simple as that. So these guys here can either borrow money or offer some equity for private client money. They can grow their businesses. They give a return back to those private clients. And so for us, it's just a perfect synergy, which is a word I hate to use, but it's a perfect synergy from a corporate to a private client. So I wouldn't really say that there's a difference at all. Yeah. They have a need and we're meeting it.
Exactly. And you said there about these contacts you've made in Dubai. If we look traditionally, going back 20 years, people wouldn't necessarily have seen Dubai as a epicenter of finance. Yeah. You'd have looked at like the traditional markets, New York, London, Sydney. Just how much has Dubai developed and how big is the potential here now?
Huge, massive. The money's not here. The money is not in Dubai. The money is in Europe. It's in the UK. It's in the US. It's in Australia. But the people that own that money, they live here. Yeah. There's a reason for that. I think everybody's talked about the mass migration of wealth out of more traditional Western nations, continental Europe and the US and especially in Australia. you know, that the people, like I said, that own all that wealth, they're moving here. They're moving here for sunshine. They're moving here for, you know, a beneficial tax environment. So hence Dubai now, and other nations as well, other parts of the world, Caymans, and you know, traditionally we know as being, you know, again, more tax beneficial environments, and for some reason the places that have better tax environments also tend to have the most sun. I don't know whether there's something to that, but these are just great places for these people to live. We're meeting these people, and then we're forming relationships with them in the different countries that they're from. You know, there's one private credit fund that we use. The gentleman is out of Dubai. The fund is in Luxembourg, funding property in the US. Yeah. So you know, it's you're in the center of the earth.
Exactly. And these high net worth individuals who have all come here now, traditionally they had advisors still in their home countries. If you look at Monaco, like 20 years ago, they all still had the same accountant, the same financial advisor in the UK. What's the benefits, do you think, of them starting to work with people more closely aligned with them in Dubai?
Yeah, I think that if you have, if you're from Australia and you have an advisor in Australia, they're not going to understand the complexities of multi-jurisdictional advice. Because especially in Australia, we have a very strong domestic bias. I don't care what happens outside of Australia, just leave me alone. The benefit for us is that we have advisors in Australia and in Dubai and across different jurisdictions, so we kind of get it. But back 10 years ago, we used to say to clients that, well, no, you should have a financial advisor here in Dubai that understands the Dubai market. You should have one back home in the UK that understands the UK market. The world is becoming a much smaller place now as it comes to financial advice in different tax jurisdictions. But, you know, I think if you have a trusted advisor back home, lean on them for advice, continue to do so. If you then have the capacity to find an advisor here in Dubai as well, you know, you should most definitely do that, because I really can't speak so much for, I've mentioned that domestic bias about Australia. Is that the same for continental Europe and for the UK? I'm not 100% sure, but you make the assumption that a financial advisor in the UK probably understands UK regulation more than they would Dubai.
I don't know, I've come across a few who I'm not sure you can say that about. Yeah. A company with 3 letters in it, but we'll skip over that one.
Got it. Yeah.
And looking at these high net worth individuals, the world has been unstable across quite a few markets over the past couple of years.
Yeah.
What are the key investment trends you think people should be looking out for at the minute?
Yeah, look, I guess with a high interest rate environment, the world's tilted significantly in the past 24 months. We're working a lot more with private markets now than what we ever have been. The old, 60-40 portfolio, stocks and bonds is 20 years ago, 30 years ago. Nowadays, we underpin a lot of our portfolios. So when we talk about portfolio construction, we typically look at creating a core of the portfolio, and that's going to generate your fairly conservative returns, but it's going to be stable. You know, call it your 5 to 10%, depending on what your risk tolerance is. Then we'll build some satellites around it, and that's typically what gets you your cream on top. It has a slightly higher risk to it, the satellite investments, but you're not risking the whole pie if equity markets come off. So that's traditionally how most advisors will build an investment portfolio. Typically, what used to sit in that core would be things like domestic or global managed funds. It would be equities or some form of growth asset. It might be property. Nowadays, the core is actually more formed by what we used to consider more riskier assets like private credit. But with the increase of interest rates from financial institutions and national reserves as well, the private credit market is a lot more secure than what it used to be, and also it's a lot more lucrative. We deal with a litigation fund, and in the UK and Europe, they've had litigation funds since Jesus played for Nazareth, right? Since 1900s.
Yeah.
But nowadays, what we've got, especially out of Australia, it's actually, I think, quite unique, an Australian litigation fund that is an income fund. So it pays you a regular income. They insure the capital. They guarantee the capital. They guarantee the capital and they insure the returns. So there's a lot more safety in things like that than what there used to be. So now how the world has changed from an investment management perspective is the core is no longer things like equities and bonds and property. It's private markets. And that's what's really maintaining the buoyancy in our investment portfolios at the moment. Most of our clients over the last fortnight, we've seen global markets come off 6 or 7%. Our client returns are still fairly stable, somewhere between the 12 and the 16%, because they're underpinned by those investments that are purely agnostic of equity markets.
Yeah. And this is a big generalization, so you'll have to excuse me, but I'm very interested to know, you've been in the game for 20 years.
Yeah.
Would you say over that time people have become less risk adverse, or they're more risk adverse?
They've become more risk averse.
Become more risk
Sorry.
I've worded that very badly.
Yeah, that's all right. That's my bad. No, we've definitely become less risk averse.
So people are prepared they want higher returns, they're prepared to take bigger gambles.
Yeah, absolutely. Yeah. Look, if we go back to when I started Capital Haus, I was sitting in a living room. I had 15 clients and $5 million of funds under management. Right, I had a brand new 3-month-old baby and a wife, both dependent on me. We were going into COVID, right? So this whole pandemic really was a new thing for a lot of us. And so initially, at the beginning of COVID, people were very insular and very protective about what they had. And what we found was people were being so conservative and being so inward that about 6 months later, everybody had not gone out because they'd had lockdowns, they'd not gone anywhere, and they'd not spent their money, and they had massive cash balances. And so people were starting to look at things like crypto, and they were looking at equity markets, and around about this time, things like GameStop and that saga, those sorts of things started to happen. So people started to look at the money that traditionally I would have spent if I was out at work buying coffees, finishing work in the afternoon, going for a few beers. That money's in my bank account. What am I going to do with it? Well, I might as well invest it. I can't do anything else with it. I can't go shopping with it. And so I think as we've come out of COVID, which I know is a couple of years ago now, but as we've come out of COVID, people are a lot more, I would say, cash rich. They have more assets than what they had going into COVID. And so when you have more assets, you see it from ultra high net wealth and even high net wealth. So when you have more cash, you're willing to take a little bit more of a risk. You're willing to be a little bit more aggressive in your nature. And so, that time now is changing a little bit. We're seeing what's happening in US markets at the moment. We're seeing things, we're seeing out of China, we're seeing tariffs, we're seeing this and that, and Mag 7, NASDAQ stocks just fall off the edge of a cliff. So that is changing, I think, a little bit. But the reason that those Mag 7 stocks rallied so high is because people were just so happy to take a punt that this is going to keep going higher and higher and higher. And so I definitely think we're becoming a lot less risk averse. I got it right that time. They're becoming a lot less risk averse, a lot more willing to take a bit of a punt, try something new, because over the last 4 to 5 years, it's rewarded them.
Exactly.
Yeah.
And if we're talking about taking a punt, we can't not mention cryptocurrency.
Absolutely, yep.
So crypto, if you look online, you only ever hear good stuff about it, don't you? It's always people trying to push people down this route of crypto investment. Traditional financial advisors, it's completely alien for them. For a modern financial advisement firm, just what role can crypto play in someone's portfolio?
Yeah, we're still led by regulation.
Yeah.
So in Australia, it's not really a grey area. You kind of can advise on it. we take a very stern view on investments that we put forward to clients. We have to be able to research it. We have to be able to analyze it. You can't research, analyze, and fully understand the tangible value of Bitcoin. You can't do that of many. You look at a mining company, you can see their debts, their assets, the resources, the contracts, all these sorts of things. You can understand to get turn that into a tangible value based on how many units there are available. That's what the company is worth. Crypto is about whether Elon Musk is talking about it on Twitter or not. It's that there is no real tangible value, and I've been told, okay, but there's only so much you can mine, and these coins are different. But ultimately, look, for me, I own some crypto myself. Yeah. Will I recommend it to a client? I'm not touching that with.
I bet it's that conversation that every client must ask you.
Yeah, I've had a few conversations. Look, I guess really I've had in the last 12 months, I've had 2, maybe 3 clients ask me about crypto and can we advise on it and can we do it for them. One got very upset that I wouldn't give him any advice on it, and so I said, well, no, that's not for me. We won't advise on it. That's kind of a company view that we just won't do it. I mean, you feel free. Like I will tell them I have some crypto myself. Yeah. That's kind of more, you don't want to be the guy that missed out on it, but also, yeah, we won't advise on it. I think like I said, it's very contingent on word of mouth through social media. If there isn't and nobody's talking about it, ultimately it became sort of like a natural hedge, like gold did. If markets were coming off during COVID, cryptocurrencies were rallying, so was gold. It was mirroring what gold and silver were doing, which are traditional hedges in global markets. I think that's changing a little bit now as well. But yeah, without being able to give a client an understanding or an idea of target price, what we think it's going to do, I think you're sort of just throwing your money at the wall.
Yeah, it's risky. I think I'm the only guy with a digital agency who's managed to buy crypto at every high point and sell at every low point. Yeah. But obviously, like you said there, you've got to concentrate on the regulated markets. Yep. Crypto isn't one of them. Are there any particular emerging markets or sectors that people are showing particular interest in at the minute that are great opportunities for people?
Look, not really sector. Traditionally we will focus on sector. At the moment, what we are looking at is what is the overarching strategy. Previously with Trump as the president, strangely enough, he's back in, and the same strategy is alive. Under Trump, US markets are highly volatile. Now, when markets are highly volatile, to understand volatility, you look at, you can type in a stock code VIX, it's the VIX, it's the volatility index. If that volatility index is high and low, that means you've got high volatility. If you have high volatility and you're expecting it to extend in a long period of time, you're looking at a long-short strategy. A long-short strategy effectively means that you're going long, as in you're buying. You're buying a position in a stock, for example. You're waiting for it to rally. As soon as you get a decent enough profit, you sell it and you short the market. It's likely to come off. When it comes off, you take profits from the short and you buy again, right? So that's a long-short strategy. It's a very basic version of what long-short strategy is. I have written an article about it. Where you can read a bit more about it. But right now we're very focused more so on that strategy, less so on sector. Gold, I think, is overpriced. I'd probably be looking to stay away too much from US markets, focusing a little more on continental Europe. They are overpriced, but far less overpriced than the US, and they look like they're going to continue to rally more. Looking at markets like Italy, for example, that's really what I would be looking at. I'd be looking at a long-short strategy. I'd be looking at continental European stocks. Unfortunately, I'd be looking at European defence stocks. Yeah.
It's looking into the future.
Isn't it? I mean, I'm kind of, we're talking about the obvious here.
Exactly.
But, yeah.
And we've touched on investment quite a lot there. But I think for a lot of listeners, wealth management is such a key topic because people of all economic stages, be them high net worth, low net worth, everyone makes mistakes with how they manage their finances, grow their finances. What are the most common mistakes you've come across over the past 20 years?
Buying high, selling low. Buying high, selling low. The people that are asking me why I can't give advice on crypto are asking me when crypto's at its highest. Because it's prevalent, people are looking at assets when they are overvalued. Okay, so fair enough. If you looked at the Mag 7 in that period of time and it just continued to rally for the next 12 months, fine, I get your point. However, the biggest mistake's buying high, selling low. It is definitely being emotional about your investments. I was speaking to a gentleman, a very, very smart gentleman, maybe 2 weeks ago. He said that, the risk of getting in trouble with this comment, women are far better investors because they don't have any ego in their investments. Men will buy stock, they'll see it go up, and they'll think, I can get more, I'll just hold it. And even under advice, we'll continue to hold it. Women will buy a stock, have absolutely no emotion, they'll get some profit, they'll sell it, they'll take the stock and put it in their bank account, they'll look for the next thing. I think there's definitely something to that, having a lot of experience with husbands and wives and seeing how they react differently.
100%. Yeah, women are much more logical thinkers, aren't they, in that respect?
Yeah, my wife keeps telling me.
Where men are always hanging on for that big thing there.
Absolutely.
So everyone needs to get their wife to invest for them.
That's right. Yeah,
men
leave the money alone.
Do you think more and more recently, because once upon a time people were quite happy with that return, like you said, they saw the return, they cashed out. Now it's like people always want more. There's quite a lot of greed. Yeah. Do you find that more and more with people wanting to buy at the top?
Yeah, I think people are much more aware of it now. People are a lot more skeptical, but then you kind of go through that skepticism and see it continue to rally, and you think, well, actually, no, maybe it will continue to go higher and higher. I think if we draw the conclusions back to, look, analysts, investment professionals, economists, I've seen them all talk about, no, this is more like the GFC, or this is more like the dot-com bubble, or this is more like... I don't think it's anything like any of those. In my opinion, this is, if we go all the way back to sort of pre-1920s when we had the first pandemic, the influenza pandemic. We then went into, that sort of finished. Then we went into the 1920s, the roaring 20s. It was 10 years of the most buoyant markets we've ever seen, then led by the Great Depression. But, previous to that, 10 years of the most buoyant markets ever. That, I think, is the most obvious correlation to what we're seeing now, because we've gone through the COVID pandemic. People have come out with a lot more money than what they expected to, and markets just continue to rally. Now, is it going to go for 10 years? It seems as though we're going to have a bit of a recession and a correction in the US imminently, which is another word you'll hear a lot of economists say over the next sort of month. But I think that a lot of people have seen it just continue to rally, and they just continue to hold, and they're probably feeling a bit of hurt over the last fortnight, but yeah.
Exactly. Well, we could dig into that all day long, but let's go back onto Capital Haus before we round up.
Yeah.
You set up in Dubai now. This is your home. Obviously, fantastic place to be at the minute. You're in that beautiful position of working with great friends every day. How do you see the company developing here over the next 10 years?
Well, at the moment, it's because we've got such great people back in Oz, and I do split my time between the two. We've just taken a significant stake in an ASX-listed business in Australia that we've been asked to support, and we're really looking forward to support more in acquisition. As I said, we've had several acquisitions in Australia, but knowing that we've got the amazing people that we have in Australia, it has somewhat become time for me to sort of say, okay, that's okay, let's now focus on Dubai. Now, Dubai, as we said, primarily has been more around distribution, funds management, portfolio management, and private market space. We really have left a lot of the retail client space alone. We haven't touched it because we just kind of didn't really need to. But we've had so many people, friends and friends of friends saying, well, I see what you're doing with people's money. Can you do it for us? And we're kind of saying, well, no, that's not really what we do here in Dubai. That's kind of happened to such a point now that I think it's necessary for us to do so. So we're in the process of going through that DIFC licensing. So I think, like anything in Dubai, give it 3 months, which is actually 12 months or 6 months. But we're going through that process at the moment. So that's the very next thing that we'll be looking at. Our next step from Dubai is Singapore. So we'll be opening an office over there very soon as well. What we're doing here in Dubai, it's very quickly starting to underpin a lot of the revenue that we have as a global company. I thought, it would be nice to move back and we can kind of have a bit of exposure there with Capital Haus, but it's taken off a lot better than what we expected. So, it's been really good for us.
Yeah, I think everyone's found that over the past few years. It's just been crazy growth here. Yeah. Well, that's been a fascinating deep dive into both Capital Haus and obviously insights into the investment financial services industry. Yeah. Before you leave us today, I'm going to ask you for a little bit of advice for everyone. What are your 3 core principles for long-term financial growth?
Look, I think, buy and hold as much as you can. Do it organically and read as much as you can. Everyone will tell you make a few mistakes here and there, but you have to read, you have to understand. Newspapers, especially financially focused newspapers, will tell you on the front page what's going to happen today. So just read the news, understand what's happening in the world.
Yeah, just not the Daily Mail.
Just not the Daily Mail.
Perfect. Well, thank you so much for joining us today, Brendan. It's been a fantastic conversation. Thank you to everyone who's joined us today. For people looking to find out more about Capital Haus, where can they find you on social media and online?
Capitalhaus.com. We've got Capital Haus AU as well on Instagram. House, Haus, not like the traditional Australian spelling.
Brilliant. Well, thank you very much for joining us again. We've got some fantastic guests coming up over the next week. So please remember to like, follow, share all our content. It lets us keep bringing you these fantastic opportunities. Until then, keep raising the bar.